Hello.
Hello.
Happy New Year, everybody.
Happy New Year, everybody. Guess what, Delyn?
What?
FHA MI rates have been slashed. Have you seen it? Half a point. This is huge. You know what this means for me? Do you have any idea what this means?
For you. Just
Yes,
you.
just me.
For Barry alone.
Only me. No one else in the whole country.
Because you have FHA on your speed dial, don't you?
Absolutely. I'm ready. So this new lower rate means I'm going to get to buy a nice big house. I'm so excited. Can I buy that house?
No. But you could probably buy a nice house.
Oh, great.
Happy New Year.
So welcome back.
Hi.
So guess what?
What?
All right, so these new FHA premiums, it's huge.
Can we say Happy New Year first?
All right, let's talk. Hi, everybody. Happy New Year. Welcome back to the show.
That's usually
Hello,
me, right?
my
Just
name
diving right in.
That's just it. My name is Barry Horvath, and this is Moving Forward TV, your local market update.
And I am Delyn Gaston. Thanks for joining us. Well, first of all, Happy New Year to everybody, because we have been on hiatus. I get to say that, kind of like, when
Can
TV
I play that on
shows
Words
take
with
like
Friends?
a thing, kind of like The Walking Dead is like mid-season hiatus. They took a little break there. Yeah, all of us Walking Dead fans, we know it's coming back in just 2 weeks.
For those who are not, we've just been on vacation with the holidays and all. So
hope everyone had a nice holiday and welcome 2015. Yay!
Yes,
this is
so
going to be a
let's-
phenomenal year.
So let's start the year off with a bang and talk about
big bang.
actually February 1 is the effective date coming through the pipeline for FHA, because Fannie Mae came out with their 97 program with
Right.
3% down. So FHA is their competitor, believe it or not, and they're introducing the new lower MI rates. And it's
Right.
actually going from 1.35 to 0.85. And the reason, there's so many reasons why they should do this, and it's a good thing, is that basically, in my mind, it shows stability of the markets, because MI insurance pays the bank, the lender, when there's a claim.
Right.
So if there's less claims, you get a lower rate insurance, just like on your automobile, okay? If you live in a market like Pinellas County where there's a lot of accidents, you pay the crappiest insurance rates in the country because you live
I know.
in one of the most populated areas in the country and you have more claims. But if you moved up to South Georgia, you would have lower rates, lower premiums, because there's less people and less claims. So FHA insurance is having less claims.
Compared to sinkhole claims. No, I'm kidding.
Sinkhole's a whole nother show on it.
I'm just joking. Whole nother
So
show.
basically, they're expecting this to increase home sales
Right.
significantly.
And that's kind of like basically what it is. As Barry said, it's kind of like FHA and Fannie Mae, Freddie Mac, conventional versus government financing. They're almost in competition a little bit with each other, who's going to get the loans. Well, over the years when after the crash, and a lot of people started doing some FHA loans because they do tend to be a little bit more lenient on credit and things, and down payment, things like that. So everybody jumped into the FHA market. Well, FHA, because of all of the crash and everything, they said, oh, wait a minute, our reserves, we don't have billions of dollars sitting in our savings
Right.
account
Yep.
to pay any future claims. So that means we have to increase the premium. So over the years, what was it, like between 2010 and 2012 or something? I mean, it was like every 6 months. It was like every 6 months the FHA premiums were just going up and going up and going up.
It was every 6 minutes, it felt like. So it was like a market watch. We had
did.
a rate watch and we had an MI rate watch. So now they're on a downtrend. So go
Right.
figure.
It was something. I mean, it used to be the upfront premium was only 1%. Now that's 1.75%. It used to be the monthly rate was only 0.5%. It went all the way up to 1.35%. I mean, more than doubled. So people were paying,
Doubled?
more than doubled.
Point,
said more
point
than
half
point-
to 1.35.
0.5 to 1.35.
More than double.
That's
Right.
what I said.
It's almost 3 times the amount. But
He's on like medication right now.
Actually, I am.
He has a cold. He's not feeling really well. But anyway, so that hurt a lot, obviously. So in the Fannie Mae market, They have the PMI, private mortgage insurance. As everyone knows, if you put less than 20% down, you have to pay the private mortgage insurance. So FHA is just called MI mortgage insurance because it's not private, it's government.
Right.
And PMI is private mortgage insurance when it's a conventional loan.
So actually, this has been in the works for a while because Congress actually knocked down the initial proposal, which was going to be to reduce the upfront MI.
Yeah, that would have been a really...
and the monthly
This
by
was a sweet deal.
a lesser amount. Yeah, they were going to reduce that by like a quarter point on the monthly and like a half a point or something up front. So it would have made a big difference, people. But they said, no. Because right now, believe it or not, the MI fund is still underfunded right now.
It is.
So it's getting criticism for taking this chance. But I think they feel like they can stimulate the market, get more home buyers to the plate, and sell more premium.
Because, the thing is that they realize, one of the reasons Fannie Mae and Freddie Mac came back into the market with their 3% down payment program as well is because with the interest rates being low, everyone's saying, okay, we've got inventory on the market. We have buyers out there that are qualified to buy. How come people aren't buying? Well,
because they can't close.
Insist.
They're qualified to buy, but they don't close. I'm just kidding.
In surveying them, like all these survey people do, they did surveys to find out why, and everyone said down payment was, one of the things that was holding people back. So they lowered the down payment, Fannie Mae and Freddie Mac, to the 3%, and FHA is trying to make it a little bit more attractive, being Fannie Mae is now kind of like, in there saying, we've got 3% down too. So as not to lose the business, they need to kind of, with their mortgage insurance, come a little more in line with the Fannie Mae.
And with the low down payment, people can essentially buy a house for the same money down as they would go to rent a new apartment because of the deposits.
Right,
and,
first,
last security.
Blah, 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 whatever,
and the monthly payment can actually be less. I mean, I don't know I know this market in the Tampa Bay area is one of the hottest rental markets anywhere. People are paying $900, $1,000 now for a one-bedroom apartment.
Wow.
And they could be owning a home. Of course, you still have other responsibilities, et cetera, but the rental market is hot, and the investors know this. They're smart.
So that's why they're coming in and they're buying up a lot of the houses and such because they know it's a great rental market.
Absolutely.
For the investors out there.
So should we talk about what kind of houses we can buy with this new program and what we could be looking at as far as it?
And what the government thinks?
Yeah.
Okay, so basically, when we're saying it's coming down and it's going from, like Barry said, 1.35% down to 0.85%. So what does that mean?
That's a half a point. Essentially, people are like, do you want the lowest rate or the lowest payment?
So does that mean you can buy a mansion?
Absolutely. I could buy a huge house like that one you saw in the beginning. That was the house I was buying with an FHA loan. Yeah, that's my house.
There it is.
Yeah, okay, all right.
Can you buy that one?
No, you can't. Because first of all, every market has different loan size limits for FHA, remember. So if you're going FHA, that house is probably going to be more than the 272 threshold that we're at right now.
Well, I know. We have a couple more, don't we? So, can we buy that one?
I want to buy that one. Can I have that one?
I do too.
That's really
beautiful,
nice.
Yeah.
I love it.
That's in Rhode Island, actually.
So you think that's FHA qualified? Is that under 270?
In our market, 270. It might be a little bit more than 270,000, just a tad. I believe it has marble floors.
Right. So we're not. It's not going to help you if you're in that
everything.
market. So, but let's talk about what it could help us in.
Right. Okay, so here's a nice house. Looks like a very nice house somewhere in the country because I got the picture offline. Now you could buy this or maybe buy this because of the savings that you would have.
Absolutely. And we're going to show payment comparison savings. So if you had a choice of which house you were going to live in, Lynn.
Right. Which one would you choose?
I want that one. So, or we could
this
even
one?
buy. That's the one I put the offer in on, by the way.
Right.
But but the new FHA rate says I could get that
one. Yay!
So
now, how are we coming up with this? Because actually, there's a couple of different ways of looking at this. You can either say, okay, so with the lowered premium, that means your payments are going to be going down. So let's just take a typical $200,000 loan, right? Just for estimated numbers. You can see on the screen there, 1.35%,
which is
the old
current.
one.
That's the current MI until February 1.
Until February 1, which is $225 a month.
Woohoo!
going down to
$141.67 a month, which is going to be the new rate.
a savings of $83 per month,
Yep.
which equates to $1,000 a year.
Or
And if you
$30,000.
kept this over the
Yep.
life of the loan for 30 years, that's $30,000. That's a pretty nice savings, don't you
Yes,
think?
I'll take the extra 30 grand.
Yeah. So do you take the extra 30 grand and, put it in, or guess what it does? So
It gives-
$83 a month more flexibility that you now have that you can kind of go use for buying power.
So $18,000 more. Instead of buying a $200,000 house, now you could buy a $218,000 house.
Now, anybody out there looking, and all of us, in the field know that's an enormous difference.
Yep.
But what's out there in the market right now for $200,000 versus a little bit higher?
Yeah, that 218.
15 to
That could be the
$20,000
difference
higher.
of you winning
Wow.
the bidding war that it's going on right now, because
Right.
you have that extra buying power.
Right. Or pool, no pool.
Yep.
Extra bedroom, not extra. That
So,
kind of a thing.
For our
Maybe
real
a better
estate
neighborhood.
professionals that watch this show, that's $18,000 more of a sale for them. okay?
Commission.
Yep. So,
Right. Hey, adds up. Every little bit adds up. So this is really I think it's a good way of looking at it, is the more buying power that you get.
We're showing our real estate professionals how to get a pay raise. So,
Yeah, really kind of close to that. All right, so and
it's
it is
$540 more in commission, in case you wanted to do the math on your commission on the extra 18 grand, but that's not important now. That's another show, right?
that's
How to
another
calculate
show.
real estate commission.
I think they already know that one.
Or, even if they don't buy the bigger house, maybe it's the difference of their comfort zone on payment. Maybe they're, we're going to talk about $100,000.
$100,000 price range, you can see it's still a nice difference, not $83 a month, but it's still a nice difference. From $112, it goes down to $70 a month. That's pretty nice. That's a $41 a month savings.
$41.67 to be exact, $500 a year, or $15,000
over the life of the loan. So you know what? That's money
So
that
go
you
figure.
could. That could be child's education. That you're putting away for, whatever it might be. Or like I said, more buying power, $9,000 more in house. So now we're talking the difference between $100,000 house or $110,000. Again, in our market, it's a big deal.
Absolutely, 10 grand.
That
makes
extra
a big-
10 grand can make a huge difference.
It makes a huge difference.
Right.
So.
Different neighborhood, different, or more house,
And I think more importantly, though, is those people that were on the fence of buying, knowing they could reduce their payment by $40 or $80 a month with the new loan program. Maybe they don't go for the bigger house or the better house like I would, but I'm a spendthrift, you know me. So I'll show you my house in a minute, but that's not important. But maybe that's the difference of them wanting to buy or not buy a house in today's market, or rent versus own. So this is huge. This is
big, and it's about time that that the government's actually kind of doing something a little bit more in our favor. We're all trying to stimulate the market with the rates being down and staying down for so long. Everybody's predictions. I was reading. It's so funny. I was reading,
predictions.
Last year's predictions, and
Predictions.
They were predicting
Seattle by 3.5 in the Super Bowl. Is the prediction. That's what the Las Vegas odds makers have, and that's what Barry's pool has too. So if you ask DeLynn, what's your pick in the Super Bowl?
Seattle.
See? Do you know who Seattle's playing?
I think it's the Patriots. Am I right?
You're so good, yeah. You know what?
I think I heard them
Listen
say
to
that
me.
in networking this morning.
If you pick the Patriots, you had a good chance because they've been in the Super Bowl.
Yeah, like all the time,
like every year.
yeah,
So
that
that
was-
was the
yeah.
same pick. So that's the
So
prediction.
do they have more Super Bowl rings than like Steelers? Because I know Maryland is,
No.
or apparently Dallas. I know, as
Yeah.
we hear
You know what?
from the producer.
Actually, I looked this up. Dallas Cowboys have not been in the Super Bowl since 1996 because I knew our producer.
Did you look that up just to
No,
rub
I
it in his
just-
face?
No, I'm just saying, but it's been a long time. I actually I was secretly pulling for them to make it in, but
You got nothing to prove.
exactly. So anyway,
So how many Super Bowl rings does the Patriots have?
Who cares?
Who cares? I don't know if you can hear that. The producer's yelling, who cares? I just know that Marilyn in our office is a huge Steelers fan, and she is constantly, her entire car is covered in Steelers stuff. And she is always saying, 6 rings, 6 rings.
Yeah,
6
I don't
rings."
think- I think
thought
they're
she was
getting
talking
close.
about the Olympics for a little while until somebody
the
filled
Ring of
me
Fire
in.
and all that. No. So anyway, so what does that have to do with FHA
I don't
loans?
know. I don't know.
Why did you go to Super Bowl? Well, we had to put our sports clip in. It just seemed natural. You said prediction, so Seattle is the favorite because of their defense. Did you see them beat the Packers?
No, I didn't.
Were you at the hockey game? What?
No, I wasn't.
Were
When
you
was it?
It was last weekend.
I was probably catching up on Walking Dead.
Oh, probably. All right. Well, we all have our priorities, so Anyway, back to FHA and what's going to happen.
The predictions were. Sorry, that's where we got off tangent. So the predictions were. I was looking at the predictions for the end of 2014. They were predicting at the end of 2013 that by the end of 2014, interest rates were going to be back in the 5s. Well, that didn't happen.
No. But we do have a lot of turmoil going on right now with Europe. We got quantitative easing going on, so there's a lot of pressure on the market. So if you're looking at locking,
Central Bank is selling off completely, which is totally putting our markets into a tizzy.
Yes, and they're talking, they're going to be pumping billions of money into their mortgage-backed securities, much like we did that we stopped earlier this year. So, if you got a rate you like and you're comfortable, you might want to lock it in. So,
I would, absolutely.
Just because you don't know what tomorrow brings. So.
When the market's in such a tizzy like this, with all of the financial markets so up in the air, it's just, I think, if you're a gambler, that's fine, but it's your choice. But, like they say, smoke them if you got them.
Smoke them if you got them.
Lock them if you got them.
Where did that come from?
Anyway, so the predictions were not really panning out as far as interest rates go. They kept them low and everything, but people still aren't getting into the market. So hopefully with the lower down payments and the lower MI and things like that, we want to get these future home buyers off the fence and buying these houses. We've got some nice inventory.
Talk to your lender about what's going on. Hopefully he's keeping you up to breast, but Fannie Mae's 3% is out. A lot of banks are not offering it, so you need to, don't think, you called your bank, they don't do it. Call another bank because they may, because, even though Fannie Mae has it, doesn't mean your particular bank may have it. So you may, always check around and see and get another opinion. And this FHA is, the lower MI is effective on case numbers, FHA case numbers pulled after January 26th. Actually, you can get it, but it's effective February 1 for the official date.
Right. And we're going to talk a little bit. Are we going to take a break at all?
No, we're going through with the whole show.
We're just going through with the whole show. Okay.
Yeah, we're going to finish it out.
What I was going to say is if you are refinancing as well, you too are allowed to get in on the lower MI rate. If we've got some people who are in the midst of doing it. If you're purchasing and you're in the midst of your FHA application right now, if there is time on your contract, you can cancel the case number and get a new one. But if there's not time, I would just be real careful with that, or talk to your lenders and talk to your sellers and things like that.
You can blow the whole thing up trying to save that MI.
Right, to save the MI, and next thing you know, the interest rates go through the roof. So
yada, 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 right?
Yeah. Probably got to be careful with that too. Yada, yada, yada.
Yada, yada, yada. So
is that a Seinfeld thing?
Yeah, it is, absolutely. So I'm excited about this. The industry is excited about this. The real estate professionals should be excited about this. The home buyers should be particularly excited about it. And Freddie Mac's is coming out with their low down payment March. So be on the lookout for that. They have a 3% down program. And
you will be able to refinance into that. Is that what you were just going to say?
Absolutely. But you can count on us to give you the latest information, okay?
Yes, you can count on that too.
Absolutely. So
all kinds of exciting stuff. It's going to be a wonderful 2015. A lot of changes are going to be happening, and I think they're all for the positive.
Yep, so tune in to us weekly for the latest update.
Yeah.
Okay.
So should we sign off? What else we got going on? Normally, this is where we do in our segment, what's going on in our world.
But nothing's going on.
There's all kinds of stuff always going on.
It's Super Bowl weekend in 2 weeks.
Tune into WeBeam TV, and they have some things from My Chamber TV. So if you are local here in the Tampa Bay market, they tell you all kinds of stuff that are going on with all of the local chambers. So whether you're in West Pasco, Trinity, Odessa, whether you're down in Clearwater Chamber, St. Pete, Safety Harbor, all of the chambers, they've always got all kinds of mixers and things like that, networking functions going on.
Get out in the community.
Yes.
Check out your local group. So anyway, get the show out, share it.
He's trying to finish the show, and I still have stuff to say.
What do you got to say? Go ahead. I'll be back. I'm going to go take a break.
Well, I was just going to mention too.
You're going to mention Trivia Crack. I'll go ahead and play this.
Yeah, he's
round
playing
here.
Trivia Crack.
I
New
love
game.
this game.
Great.
Oh, it's so fun
I don't
too.
even know.
If you want to challenge me, go for it.
I'm saying to him yesterday, what? You're doing crack now?
Trivia Crack.
What are you doing?
It's awesome.
Anyway, it is tax time coming up here, folks. So everybody's kind of getting your tax stuff together. Remember, if you are applying for a loan right now, refinancing, or buying a house, first of all, do not pack your tax stuff away because we're going to need it. And second of all, on the tax stuff, it does have to be filed. This gets, and you real estate professionals out there, it gets a little sticky right about now because
what
people
color
are
is the Golden Gate Bridge in San Francisco?
red. The producer's been there several times.
Correct, you got it right.
Yes.
Way to go.
I've never been there though. Anyway, on your taxes, we do have to have all of the tax papers and they do have to be verified through the IRS, all of them. So right now, filing early is a good thing if you're in the midst of buying a house so that we can get the verifications in. That's just a little tip.
Little tip, yep.
A free little nugget there.
Throw a nugget. All right, I'll give you the nugget too. 2014 Tax Reform Act was passed on New Year's Eve. There is no taxation for the forgiveness of debt for any short sale, foreclosure, or modification that reduced your principal for the year 2014.
Great news if
Yes.
anybody had those kind of difficulties or
So
struggles
even though
in
you'll get a
2014.
1099 on those,
Right.
see your professional tax advisor to help you out with that. So that's a huge
Which
nugget.
brings up, see a professional tax advisor. I do not recommend doing them on your own. Just
Yep.
like with mortgages and stuff like that, it's gotten very complicated. You definitely want to be safe rather than sorry, especially if you have things like that.
All right, can I finish Trivia Crack?
He wants to finish it. That's all we have, folks. We appreciate you watching. Get us out there. This, of course, will be parked, so you can put it on YouTube, Facebook, LinkedIn.
Twitter. What's a Twitter? I always wonder.
Can't
what is
do
a Twitter?
that. There it goes. Sticky lipstick.
What is a Twitter?
It's a Twitter thing. I don't know. You tweet. Anyway, we are out there on all of the social networks. Share us. Get it around.
Like
I
us.
think that this was exciting news. So
It is big news. So get it out. Tell your friends if they've been looking at houses.
now is the time.
Now's the time. Get with your real estate professional. Start looking. Go get pre-qualified and get her done before this market. I mean, we're up 17% for the year in this market.
That
So
means if you're
prices-
buying by the fall, the house you're looking at might be costing you more money.
Yeah, absolutely. And people, even that bought in the last 6 months, are already looking to refinance.
Right.
It's a great time to, check and see if it makes sense. So anyway, this is our new showtime, 5:30 on
Yeah.
Thursdays. So make sure you tune in if you want to see us live. If you want to watch the recording, we're just as good, but we're best live. I'm going to tell you.
Yeah, no cuts. You can see all of the bloopers. We don't have to do a blooper show because pretty much they're all.
Yeah, the whole show is a blooper. So.
Anyway, we appreciate you guys watching and we appreciate your support. Thanks so much. We are today and every day.
Moving forward.
We will see everybody
with lower MI rates.
I'll see you next week.
Bye,
Bye-bye.
everybody.